Hi everybody, welcome to this week's ICE commentary, US dollar index and currency market update. You're speaking with Nick McDonald. I will be your presenter for this video. First things first, anyone that's been following these videos for a while and watching my analysis of the markets will know that it's almost entirely technical. However, there's occasionally some piece of fundamental or some piece of news which comes up which actually can have a big influence on the markets, and I usually talk about that. Now this week we've got perhaps one of the biggest ones that we could ever be aware of, something which is very likely to move the market, and that is the Congress vote for the debt plan and the talks of raising the US debt ceiling, etc. So anybody that follows any ounce of news whatsoever will be aware of that. I very much keep an eye on the charts and hardly follow news at all, but it's almost impossible not to know that that deadline is coming up. It's a couple of days' time, and it's something which is really likely to move the markets. So I don't even want to start predicting what will happen there. I could say a number of things. If the plan is good, the dollar will do this. If the plan is bad, the dollar will do this. But equally, there's so many scenarios within that. For example, if the plan is not quite as good as people expected, we're likely to get a big move in one direction. And then, however, once the plan is assessed in more detail, get a big move back in the other direction. So what we can often get around news is a big whipsaw as people assess the news and really let the impact of the news sit in. It also depends what politicians come out and say after the news and how that news is analysed by the market. So it really just is too risky, in my opinion, to try and make a call on what the market will do this week based on that news coming out. However, what I will do is still just look at the charts as per usual and give my technical view of what the market should do, and then we'll see if those do happen to line up with the fundamental situation. But there's a lot of uncertainty out there, so the technicals this week I'd put less faith in than I normally would, simply because there is going to be some kind of surprise in the next couple of days, and we need to wait and see what that surprise is. So let's have a look at the charts then. Let's start with the monthly chart. These are a couple of lines I've had drawn in the chart for a while. 7600. You guys are all fully aware of. We've got these old lows down here. We came right up, we've rejected 76 again on the monthly. We're right down towards the lows. US dollar is looking very, very weak. Any breakdown through these lows is looking like a continuation lower to me. We've come in, we've put in a lower high. In fact, I could put in another red arrow here now. We've put in a lower high. We should break down through these lows to a new low, and the dollar index is looking extremely bearish on the monthly chart. Weekly chart too, now it's broken out of this little pattern before when it broke to the upside and made a higher high but failed. Well, now we've broken down to a lower low. And it's just that bit more convincing than that previous break. When it broke up literally for a matter of hours here and then rejected. Whereas this time we've broken down for a number of days and we're holding down there, we've closed down there. It's looking quite bearish down at this point. We've even broken two previous lows. So certainly the weekly chart as well is moving back into, it's not a confirmed downtrend yet, but it's moving back into looking bearish, certainly more bearish than bullish, and more likely to go down, and in line with the monthly chart, backing each other up. Coming right down to the daily now, and this is really where I see the clearest trend. Coming down, moving back into the averages was a bit uncertain there. Here was that big rejection of 7600, came up, big bearish candle, broke down through, came down again, came up and tested 7600 and broke down again. So many trading opportunities off that level have occurred. Then we've come right down there, made the lower low, even made a lower low than this previous one, pulled back into the averages, red candle. Plain and simple, any breakdown through Friday's candle for me is looking bearish. Any breakdown through there would be a bearish move, looking for a move to the downside. So we've got daily, weekly and monthly all looking pretty bearish on the US dollar index, and I'd be expecting that to happen exactly this week. In fact, I'd be extremely confident of that happening this week if it wasn't for just that one big piece of news that we've got coming. So it's just a reason to be very, very cautious. Just let's have a look at a couple of spot currencies and how this is backed up. So we've got euro dollar here, and I'd like to look at the monthly charts on euro dollar and cable, but really nice, similar patterns to the monthly on dollar index, just obviously inverted, and just got a really nice bullish candle here. If we can break up through the high of that last month's candle, then it's going to be looking really good. Euro is looking strong for a move to the upside there. And same on cable, very, very similar. Just coming and looking at the monthly chart, we've got a nice move up, pull back, nice move up, pull back, very bullish candle, and any break just up through last month's candle is going to be looking like a very positive move to the upside. I've been talking for a while about cable getting up and kind of testing at least 1.7 before then deciding if we're going to break up through there and make a higher high or not. But between where we are now and 1.7, we've still got a pretty good move. So I think cable should be getting up and testing that kind of level and moving on. Both of these are backing up the US dollar weakness. and that's how it looks across a number of the charts. In fact, just having a look very quickly at a couple of others, dollar yen, these are some lines I've marked on my charts quite some time back, saying we had this monthly candle breaking down through it. We're looking for it to come down and at least have a 1-to-1, i.e. if this was an entry and stop loss, this was a sensible target. And dollar yen has gone on and done exactly that, moved down as expected, and still looks bearish as well. So does dollar Swiss. Dollar Swiss was the fastest moving one, and perhaps the one we might have thought wouldn't fall quite as hard if the US dollar continued to fall. However, it's just kept on falling just as hard, and it's by far the where we're seeing probably the most dollar weakness here, and it just continues to happen. In fact, the one other exception to that would of course be the Kiwi dollar and the Aussie dollar, where we just keep on seeing just extreme strength here on, say for example, the Kiwi dollar just keeps on pushing higher and higher, and that's largely just because the US dollar is so weak, and we're picking a couple of currencies here like the New Zealand dollar and the Swiss franc, which are seen at the moment as safe havens. The New Zealand dollar never used to be a safe haven, but now suddenly it seems to be seen as one with this debt crisis going on. And we're just seeing that strength there in the Kiwi and the Swiss franc as well. So coming back and wrapping this up on the dollar index, it does look bearish. It looks bearish across all of the spot currencies, and it looks bearish across all of the time frames here, daily, weekly, and monthly. Under normal circumstances, this should be going down, and technically, it absolutely should be going down this week. We just have to be very, very aware and managing positions accordingly that a piece of news could come out at any moment this week, which is likely to have a wild impact on the markets, and we need to just wait and see what that news is to see just how wild an impact there will be, and whether there'll be follow through from that, i.e. whether we get a move either up or down, which is likely to continue based on the news, or whether we just get a whipsaw. And a whipsaw is really the biggest element of risk, and that's the piece that I want to try and avoid. And any positions I do take before that news comes out, I will just be managing my risk accordingly, and knowing that any trade I take technically could be very much invalidated within just one announcement from a US politician. Happy trading all, have a wonderful week, and hopefully next week this news is all out in the open and we can assess the impact of that, and we can assess how we can move forward from there.